Hello everyone. While policymakers in India are undertaking all the suitable measures, perhaps in a moderate return environment, given the situation on the global front, particularly on the global growth and global trade front. That's where a balanced allocation becomes extremely relevant. Keeping this in mind, we're pleased to launch ICICI Prudential Balanced Hybrid Fund. By investing across both equity and debt, the scheme seeks to bring together the growth potential of equities and the balancing role of debt within a single portfolio in a defined band of 40 to 60%. Let me first take you through how we approach the equity component of the scheme. While we have seen recent turbulence in the markets due to various reasons, equities have historically played an important role in long-term wealth creation. There has been a reasonable underperformance in the market, particularly in the large cap universe. There are stocks where they are trading well below their intrinsic fundamental values. Our equity allocation decisions are guided by both top-down and bottom-up research. From a top-down perspective, we use factors such as incremental money supply growth and individual sector and subsector trends. From a bottom-up perspective, we focus on intrinsic company value and stock-level fundamentals, including profitability, cash flow generation, and competitive strengths. The underlying thought process across both top-down and bottom-up is driven by contra thinking. And if one were to think in terms of sources of alpha creation, there are three. 1. Sector allocation and thematic allocation. 2. Core stock selection. And 3. Tactical stock ideas, which are for a relatively short period of time. While I have spoken about equity allocation and how we approach stock selection, the debt component also plays an important role in the overall portfolio. Let me now hand it over to Akhil, who will take you through our approach towards managing the debt allocation in ICICI Prudential Balanced Hybrid Fund.
When we think about investing, growth is often the first thing that comes to mind. But it is equally important to understand how a portfolio navigates different market environments and volatility that comes with it. That's where allocation to debt can play an important role within a balanced portfolio. So, let me talk about how we intend to approach the debt allocation within the scheme ICICI Prudential Balanced Hybrid Fund. As the name suggests, the scheme seeks to balance growth potential of equity with the relative stability of debt over the long term. The debt portfolio will be managed actively and can account for 40 to 60% of the scheme, depending on market conditions and valuations. Within debt allocation will be done dynamically between government securities, corporate bonds, and credit for accrual and duration management. Our debt allocation is guided by multiple factors: view on interest rates, overall macroeconomic environment, prevailing credit spreads, and credit environment. We use internal macro frameworks to assess the interest rate cycle and position the portfolio duration to benefit from interest rate volatility. At the same time, we will evaluate accrual opportunities through a bottom-up approach where the issuer is selected after internal credit research and exposure in the portfolio is taken on risk-reward basis. The final debt portfolio is a mix of duration and accrual strategies based on our assessment of risk-reward and market conditions. To sum up, for investors looking for a portfolio that combines growth potential through equity with the balancing role of debt, ICICI Prudential Balanced Hybrid Fund may be worth considering. Looking forward to your support in the NFO ICICI Prudential Balanced Hybrid Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.